Last Friday, we went over what is the Santa Claus rally, and everyone seemed to like that. So in this one, we're going to go over another seasonally important thing this time of year, which is the January effect. So shout out to the guys at the Stock Traders Almanac. I'll bring mine in, but it's going to look a little weird. Yeah, the blue screen. But the Stock Traders Almanac, again, is just a collection of seasonality work. And I'm not a huge seasonality guy, but ones that have to do with elections and taxes make a lot of sense to me, because those are two things that unfortunately we all have to deal with all the time. So when we're dealing with politics or when we're dealing with taxes, it's going to create some scenarios that I think every year we could potentially learn to profit off of based off what we're seeing that particular year in the market. So what is the January effect? Well, right away, it is not just, hey, market goes up in January or anything like that. It's more about the fact that small caps outperform large caps by about 3 to 7% on average, which is a pretty substantial outperformance when it comes to, again, small caps versus large caps. And we'll go into some live charts in a second here, but small caps continuing to make new all-time highs. We're starting to see that. We're getting another all-time high as of yesterday. We just continue to move here over and over and over again into all-time highs in the small cap space. So we're seeing price action line up with this seasonality aspect of the overall market, which again is what we want to see for this to continue. So essentially what's happening here. So from about mid to late December, which we are, as of recording this, are about mid-December, to late December, or to all the way potentially to March, we have this area in which the small caps outperform these large caps. Now, why? It's essentially tax loss harvesting. So when into November and into early December, quite often people will start to sell what isn't working. And kind of by definition, small caps are going to be in that list. If you think really hard about it, small caps are by definition always going to suck. And it's because A, they're small kind of startup companies that are just trying to get a go of it. But then at the same time, they're trying to become bigger companies. And as soon as they become bigger companies, they're, again, by definition, no longer small cap. So again, imagine you're playing, I don't know, it's a hockey team, but you actively and consistently kick out your best players over and over and over again. You're just kicking out your best players out of the team. By definition, you're kind of going to suck. So if I'm looking at my portfolio at the end of the year, small caps, the ones that are still small caps at the end of the year and they haven't become mid caps or large caps or anything like that, more likely I'm going to sell those. So this tax loss selling will depress prices over time. And then near the end of the year, well, that selling, generally speaking, is going to stop because you have to, get all this settled by the time the end of the year happens. So as the end of the year comes down, this selling pressure, I was going to say fake selling, but it's real selling, but selling not because I don't like the company anymore, just because I have tax gains over here and I want to offset them with tax losses here. That will, again, push down the price of small caps. And then the price of small caps will then rebound when that selling pressure settles. And then also later on, depending on where you are, it's going to be different. There are rules where you can, when a certain amount of time elapses, you can buy them back. So let's say I had this small cap company that I wanted to sell because it just hadn't done anything, and I can harvest that tax loss versus some other gains that I have, get that off the books. Well, turns out I really like the company. And, I think the company is actually going to do well. So as soon as the time elapses that I'm allowed to do it, I may go in and repurchase that company. So what's me selling it to tax loss harvest, then when that is over and I can buy it back, we get the push back up. So I'm repurchasing those securities. So this particular chart is just one that shows the difference between large cap and small cap. So the light blue is small caps, and then the dark blue is large caps. And you can see that even in down years, quite often you get this outperformance in the small caps. So you're seeing this over and over and over again. So if we go to a chart and we just do IWM divided by the SPY, this is a ratio chart. So if this line is going to go up, which you see it normally doesn't, then that means small caps are outperforming large caps. Over time, large caps seem to do much better than small caps. In a weekly chart, right? Ever since 2013, large caps have been beating the pants off of small caps. But if we zoom in over the last little bit, this November, December, that has flipped, where this line going up tells us that small caps are outperforming large caps. So what's the takeaway here? What does this all mean? Well, if this is going to continue the way it does, or the way it's meant to, seasonality-wise, for the next couple of months, it may just be time to shift your hunting ground. Maybe you're someone who really likes playing large cap tech. That's, you've made great monies and your Palantirs and your Nvidias and all of that. Well, great. Maybe it's time to open up and explore a little bit more and start to look a little bit harder in this small cap arena where there's 2,000 stocks to potentially trade. And with those 2,000 stocks to potentially trade, there's going to be tons of different sectors when it comes to banks and drug companies and healthcare and all of these different names. And I, for one, am here for it. At StatsEdgeTrading, we trade everything. We trade large caps if that's what the system tells us to. We trade small caps if that's what the system tells us to. But I like it when small caps are doing better because it's more of a variety for the system to pick up on, the systems that are always looking for the strongest names out there in order for us to trade. So I'm pumped for it. I think this period of time may actually benefit what we're doing over at StatsEdgeTrading and what we're building there. So if you are interested at all in starting your new year off right and starting to trade with an statistical edge, not just drawing lines on a chart because they make you feel good, go on over to StatsEdgeTrading. You can see all of the systems here and the returns that we're looking for in these returns we're looking for in backtest, and come give us a shot. Again, one low price, day trading, swing trading, investing, very, very soon crypto as well. And sign up at the very least for the free newsletter, free trading courses right here. And that gets you on the email list. So I email you every time a video comes out. And until I talk to you guys next time, get away from the screens.